This is the Weekly Outlook. Thank you for joining us at xm.com. On the back of the Easter holidays, markets will take in CPI numbers for March as well as the minutes of the latest FOMC meeting. But could these corroborate the pivot view? I'm Cristina Marujos. With me today is our senior investment analyst, Geralambos Pisuros. Geralambos, let's start by looking at the inflation numbers, which are out on Wednesday. Lately, we got a string of disappointing U.S. data, pushing against the soft landing narrative. What could we see in the March CPI data, and how could the dollar perform?
Hello, Christina. Yes, at the start of the week, investors timidly began tilting the scale towards another rate hike by the Fed at the May meeting, but a streak of disappointing US data thereafter revived recession fears and thereby doubts on what could be the wisest choice at the next FOMC gathering. Now investors are again split on whether another hike should be delivered or not. Now, with regards to the data, both the ISM manufacturing and non-manufacturing PMI surveys disappointed on all fronts, from employment to prices, with the outlook of the labor market becoming dimmer after job openings for February slipped to their lowest in nearly 2 years, and after the ADP report revealed that the private sector gained fewer than expected jobs in March and much less than it did in February. Now, next week on Wednesday, the headline CPI rate is expected to have continued to slow to 5.2% from 6%, but the core rate is forecast to have ticked up to 5.6% from 5.5%. Now, in my view, a potential uptick in the underlying inflation rate is unlikely to vanish bets of a potential hike in May. But the further slowdown in the headline inflation will not discourage those expecting a pause either. So, if we do get a downside surprise, this will add more credence to the view of the latter group and could also prompt investors to speculate more basis points worth of rate reductions by the end of the year. Currently, investors are expecting interest rates to end 2023 at around 4.2%. Bringing that implied rate path even lower could prove negative for the US dollar.
Of course, on Wednesday, after the CPI numbers, we'll also get the minutes of the latest FOMC meeting, a meeting that caused a disconnect essentially between the Fed and markets, as although Powell pushed against the pause, the wording in the forward guidance was interpreted by markets that a pivot could be in the cards. So could the minutes shed some more light on that?
Yes, indeed. At the latest FOMC meeting, Fed Chair Powell pushed against the pivot narrative, and yet market participants put no faith in his words, even as the new dot plot pointed to another 25 basis points hike and no cuts at all until the end of this year. And to be honest, lately, investors seem to ignore anything that pushes against their view and paying more attention to reaffirmations. Thus, they will dig into the minutes for even the slightest glimpse that some officials discussed the possibility of a pause. If they find anything that adds credence to that view, to the rate cut view or the pause view, they are likely to add to their dollar short positions, especially if the CPIs earlier miss their forecasts.
And now let's cross into Canada. We have one central bank meeting on the week's agenda. The Bank of Canada meets on Wednesday. It was the first major central bank to pause its tightening. What could we see at this meeting, and what should Loonie traders keep an eye out for?
Yes, the Bank of Canada became the first major central bank to hit the pause button in this tightening crusade. And although it noted that it remained prepared to hike more if needed, it also said that data remains in line with expectations that inflation will come down to 3% in the middle of the year. So, data after that meeting, after the latest meeting, showed that most inflation metrics in Canada slowed by more than expected in February, reaffirming the bank's view and prompting investors to assign a small chance of a rate cut as soon as at next week's gathering. Specifically, the investors are seeing a 15% probability for a 25 basis points reduction, with the remaining 85% pointing to no action. This means that if officials decide to keep interest rates untouched, which is the base case scenario for the market, Any reaction may come from hints and clues regarding the bank's future course of action. Now, if there is a small hint that they could start cutting rates very soon, this could add pressure to the Canadian dollar, which, to be honest, showed some signs of life this week due to the rebound in oil prices. Now, in the case that officials decide to cut rates at this gathering, which I see as an unlikely case given that inflation is yet to meet its target, the Loonie is likely to fall off the cliff.
Lembos, thanks so much. This was the Weekly Outlook here at xm.com.